You're back with CNBC's Cash Flow. I'm ChengLei in Shanghai. Well, the China market breaks for lunch in around 10 minutes, and the Shanghai Composite showing that yesterday's 1% rally was just a one-day tour. Take a look at the index now, down by 0.25%, 2,640. Turnover continues to be extremely low as investors sit out this tightening uncertainty period, especially as record-high pork prices are adding to inflation expectations and fears of more monetary tightening. Well, today's theme does seem to be bargain hunting. We're seeing a lot of the consumption plays attract buying. On the downside, property stocks are being sold off. Concept stocks wise, let me show you some of the rare earth plays rebounding strongly after being dumped for a few sessions, especially since last Friday, partly on news that Jiangxi's Shenwan rare earth materials is heading for an IPO, and that is boosting hopes that that will push up valuations of existing rare earth plays. Take a look at that. Dingli Tech Development up almost its daily limit of 10%. China non-ferrous metal up 2.2%. Also outperforming are food and beverage stocks, helped by bargain hunting. They had been under pressure in the past couple of months due to worries about higher costs. Now analysts are saying that their valuations are attractive and that earnings for the first half should be strong. Xinjiang hops up 7% almost, and Inner Mongolia, which is the major dairy play, Ely up almost 4%. So quiet session again for the Chinese market. Back to you, Oriel.
All right, Lei, thank you so much for that. But do stay with us because we're going to talk more about the China market with Philip Chan. He's the director at Shenwan Securities, joining us now live from Hong Kong. Philip, it's good to have you with us here on Cash Flow today. Let me ask you about what's going on in the China market. You know, we've been talking a lot on this show about how these China stocks are being viewed over in the US with these transparency issues and, of course, corporate governance issues, and this problem is certainly coming to the fore because you don't need to just look at what's going on in the US market. We're also seeing the Singapore-listed China stocks also being tainted with the same brush. How do you fix this situation, and would you avoid then investing into some of these stocks in the overseas markets?
No, you can't say that you would avoid them altogether. It's as I've said before on this program, we get sort of like bouts of bad news, corporate governance in the China markets, whether they be in Hong Kong, listed in Singapore or US, wherever they're listed. We get batches of bouts of this bad news every few years because obviously there is some corporate governance issue which is sort of like it's happened at, say, other companies as well. And anyway, this is not going to be the last time it happens. We'll probably get another bout in a few years. So I think the only thing you can do is basically just improve your due diligence, and also you've always got to be mindful about investing in private enterprises in China because it's the fastest growing market. Yes. The private enterprises, but then there is more risk involved.
Philip, your stock picking on China includes seed producers, partly because of the droughts and then flooding. What do you make of the extreme weather's impact on food production? Is it too early to say still?
It is a bit too early to say, but it's obviously it's going to affect some of the harvests in the autumn or even in near term. I think that of course the speculative money has already gone into some of these these seed plays, which have been mentioned on this program as well. And I think that that's probably where we're looking at. But I think again it's a bit too short term to say.
Philip, it's an interesting time in the China market, certainly, because there are a lot of issues surrounding any sort of investment decisions, including, we're seeing pictures now of the flooding over there in China. We've also had a drought. We've got possible interest rate rises coming through. Look, given everything that's happened, there always seems to be a way of making money out of this environment. So where would you be putting your money right now?
Well, we as a house, we're basically quite sanguine on CPI, I mean interest rates policy, because we see that they haven't moved on interest rates for a while. They've been moving RRR, which is different, but interest rates haven't been moved. We see that possibly they're beginning to ease on lending to certainly to small businesses, and so therefore, the government has changed its stance a little bit in the short term. So we see that there's a strong possibility that CPI has peaked, or will be seen to have peaked in August. And so therefore, we think that look at those companies which where supply is strongly controlled by the government.
So is this a good time to buy A shares? When will the market come back?
Well, there's no thing on timing here. It's only when, say, when the mass sort of start, or the institutions start thinking of going back in. But the liquidity has got down to a point where, it's, as you say, it's at the lows, so it can't. We don't think can't go down much more. As I said, once we get the clear picture on CPI going forward, but ahead of that, maybe there's some people are willing to take the plunge, and bet that we have seen a dissipation in CPI.
Okay. Alrighty, Philip, good to have you with us once again. Thanks for talking to Lei and I here on Cash Flow. Philip Chan with us there. We are going to have more on the markets for you right after the break. Of course, we will be bringing you the opening numbers for Japan's afternoon session. We'll be back.
Still essentially insolvent, in her opinion. Spain and Italy have huge problems too, saying that the stress in the money markets and